Hello, I'm Marianne Deveni. No growth for Canada in the first quarter of 2015. That's the news we got this week from Bank of Canada Governor Stephen Poloz. But he did lower the interest rate and is expecting better growth ahead. So what does no growth mean for the federal budget, which is to be released next week, and more importantly, for our taxes? Randall Bartlett, senior economist at TD Bank, and we'll discuss this and more. Randall, good to have you.
Good to be here.
So no growth in the first quarter. Is this just a one-time thing, or is it possible our economy could actually contract?
No, well, the Bank of Canada governor was quite clear that no growth in the first quarter is really just sort of a front-loaded change to their overall economic forecast.
So you'd agree with that?
We definitely would agree with that. Looking at our March quarterly economic forecast, we were expecting growth of around 0.5%, and we've come down a little bit since then, but we're very much expecting growth is going to be flat in the first quarter, weak generally in the first half, but then to pick up in the second half of the year and into 2016.
So what was the cause? Was it all due to oil prices?
It's very much an oil price story. That's the primary cause of what we're seeing playing out in the Canadian economy. We saw weakness in the last quarter of 2014, and we're expecting to see weakness the first half of 2015. But the other compounding component of this actually is the fact that the U.S. economy was hit by a second severe winter. That's really dragged on U.S. growth, and so we're expecting that to be run off again in the second quarter of the year and to actually provide a bit of an uplift as the U.S. economy recovers.
So the outlook for things ahead is a little bit rosier?
Much rosier than the first quarter. There's no question there at all.
All right. What about interest rates? Where do you see them going? More of the same?
Well, the bank was actually very clear in that they're planning on maintaining interest rates for now where they are at 75 basis points for the overnight rate. And that's something that we're a little bit surprised about. We're expecting to see a little bit more dovish tone in the Bank of Canada's release yesterday, but actually it was very, very balanced. So what we see is that the Bank of Canada is very comfortable where it is in its current monetary policy stance, and we're expecting them to stay there until the final quarter of 2016.
That's quite a long time.
It is, but we were on hold for essentially 5 years at 1%. So the markets were very much taken aback by the cut we saw in January. It came as a large surprise, and we're expecting that they will stay on hold going forward. So when you put in the perspective of where we were for the prior 5 years, another year and a half really isn't all that big a deal.
So oil prices obviously affecting the economy, but also affecting individuals and corporations. How does that translate into the federal fiscal budget, which is coming up next week?
Well, if you take a look at our March quarterly economic forecast, what you see is that we actually reduced our outlook for corporate profits in a big way. And we're expecting that lower oil prices are going to feed into weaker corporate profits through 2015. And ultimately, that's going to weigh on non-residential investment, hiring, and ultimately incomes for families. So when you have corporate incomes and personal incomes growing at a much weaker rate, in fact turning negative in the case of corporate, that's going to weigh on revenues of the federal government, as well as the provinces that have borne the brunt of the lower oil price impact.
So are you expecting a deficit?
We're not expecting a deficit at all, actually. We think that the federal government can actually weather the storm and pull out a balanced budget in 2015 as they've committed to. And we think that they've made steps in that direction. They've sold GM shares last week, which we think are going to add around $1 billion to the federal budget this year, which is a positive. So we think that the government's taken the right steps. They may need to take some more to get there, but we think it's not going to take them much to meet their target.
So they have more to sell. I guess the Ontario government is also looking to sell a piece of hydro. Does the federal government have more things they can sell as well?
Well, they do. They have a few more assets in terms of some coal assets, Ridley Terminal, that kind of thing. We're not expecting them to necessarily do that this year, and we don't think they would need to take that step per se. We think that, with moving a little bit of spending from year to year, that kind of thing, some tinkering around the edges will actually get them to where they need to go.
Okay, so more importantly, how does this affect our taxes?
Well, there are a couple of measures that were discussed in the 2011 Conservative Party of Canada election platform that have yet to be introduced. And I think the big one for investors is the doubling of the TFSA contribution limit. Sure. And it was recently discussed at a Conservative caucus meeting by Minister Oliver, and he lent his further support to introducing that measure. So there's a lot of speculation that we might see that in next week's budget. So we'll have to see. All
right, we'll definitely wait and watch for that. Thank you very much.
My pleasure. Thank you.
I've been joined by Randall Bartlett, senior economist at TD Bank. I'm Marianne Deveni. Thanks for watching.